CISI International Certificate in Wealth and Investment Management. Test yourself with 25 full-course flashcards. What is the investment chain? 3, 2, 1. The answer is the link between savers and borrowers. Intermediaries such as banks, fund managers, and exchanges connect investors with those seeking capital. How does discretionary management differ from advisory management? 3, 2, 1. The answer is discretionary managers decide, advisory managers recommend. A discretionary manager can act without prior client approval, while an advisory client makes the final decision. What is wealth management? 3, 2, 1. The answer is investment management combined with financial planning. The integrated service helps clients grow, protect, and transfer wealth over time. What are the 3 main objectives of financial regulation? 3, 2, 1. The answer is consumer protection, market integrity, and financial stability. Regulation protects consumers, supports confidence in markets, and reduces systemic risk. What are the 3 stages of money laundering? 3, 2, 1. The answer is placement, layering, and integration. Funds enter the system, the trail is obscured, and the money returns appearing legitimate. What are Chinese walls in financial services? 3, 2, 1. The answer is internal barriers that restrict sensitive information flows. They help prevent material, non-public information moving between departments and reduce conflicts of interest. What is the dirty price of a bond? 3, 2, 1. The answer is the clean price plus accrued interest. The dirty price is the actual amount the buyer pays when accrued coupon interest is included. What is the relationship between bond prices and yields? 3, 2, 1. Answer is they move in opposite directions. When yields rise, bond prices fall. When yields fall, bond prices rise. How do futures differ from forwards? 3, 2, 1. The answer is futures are standardized and exchange traded. Forwards are customized OTC contracts. Futures use daily margining, while forwards are normally settled at maturity between counterparties. What are the main benefits of collective investment? 3, 2, 1. The answer is diversification, professional management, and economies of scale. Funds can also provide access to markets that may be difficult for individual investors to reach. How do open-ended funds differ from closed-ended funds? 3, 2, 1. The answer is open-ended funds create units. Closed-ended funds have a fixed share count. Open-ended funds transact around NAV, while closed-ended shares can trade at a premium or discount. What does the Sharpe ratio measure? 3, 2, 1. The answer is excess return per unit of total risk. It divides return above the risk-free rate by standard deviation. A higher result indicates better risk-adjusted performance. What is the expenditure formula for GDP? 3, 2, 1. The answer is GDP equals C plus I plus G plus exports minus imports. The components are consumption, investment, government spending, and net exports. What is fiscal policy? 3, 2, 1. The answer is government use of taxation and spending to influence the economy. Expansionary policy lowers taxes or raises spending. Contractionary policy does the opposite. How does demand pull inflation differ from cost push inflation? 3, 2, 1. The answer is demand pull comes from excess demand. Cost push comes from rising production costs. One starts with spending pressure, while the other starts with higher wages, materials, or other input costs. What are the three forms of the efficient market hypothesis? 3, 2, 1. The answer is weak, semi-strong, and strong form. They differ by whether prices reflect past data, all public information, or all information. What does the CAPM formula calculate? 3, 2, 1. The answer is an asset's expected return. CAPM adds the risk-free rate to beta multiplied by the market risk premium. How does systematic risk differ from unsystematic risk? 3, 2, 1. The answer is systematic risk is market-wide, unsystematic risk is company-specific. Diversification can reduce unsystematic risk, but it cannot eliminate systematic market risk. What is the difference between strategic and tactical asset allocation? 3, 2, 1. The answer is strategic is long-term. Tactical makes short-term deviations. Tactical changes seek opportunities, while the strategic allocation defines the portfolio's long-run policy. What is the efficient frontier? 3, 2, 1. The answer is the set of portfolios offering the highest expected return for each risk level. Portfolios below the frontier are inefficient because a better risk-return combination is available. How does attitude to risk differ from capacity for loss? 3, 2, 1. The answer is attitude is willingness, capacity is financial ability. A client may accept volatility emotionally, but still lack the finances to absorb a serious loss. What is loss aversion? 3, 2, 1. The answer is the tendency to feel losses more strongly than equivalent gains. This behavioral bias can cause investors to hold losing investments for too long. What must an advisor consider in a suitability assessment? 3, 2, 1. The answer is objectives, financial situation, and relevant knowledge and experience. The assessment must also reflect the client's capacity for loss and the proposed investment's risks. What is the key difference between defined benefit and defined contribution pensions? 3, 2, 1. The answer is DB places the main risk on the employer, DC places it on the employee. Defined benefit promises an income, while defined contribution outcomes depend on contributions and investment performance. What are the three main roles in a trust? 3, 2, 1. The answer is settlor, trustee, and beneficiary. The settlor provides assets, the trustee manages them, and the beneficiary receives the benefit. Ready for more? Continue your CISI exam preparation at Exams Academy.